They're getting their mojo back because, believe it or not, they're still waiting for their benefits from the recovery from the pandemic. They're very tied to travel-related spending. All three networks are travel and entertainment-related spending. And as we've kind of come through this last variant where you've seen the latest wave with Omicron, but not triggering necessarily a huge amount of shift in border closures, et cetera, there's a lot of increased investor optimism that travel, entertainment, and other luxury goods, like leisure spending will come back in force in 2022. And that's what we're really waiting for with those names. Just as a reminder, prior to the pandemic, about a quarter of Visa, Mastercard, and American Express's revenues were linked directly to travel and entertainment spending. That is still down over 40% or so from where it was in 2019. Wow. So there's a big piece of these businesses still to come back.
Big catalyst for those who are looking for the stock moves and appreciation. So basically, it's don't worry about the competition, the pressure from the likes of Amazon on some of these margins. Just look at the revenue growth story that we're likely to experience. And why do you think even a name like Global Payments, which was a really tough stock last year, Fiserv, FAS, why do you think they could still have a strong year as well?
Yeah, there's kind of with those guys, Fiserv, FIS, Global Payments, all three of which are more of these kind of plumbing companies in the payment system. They also are kind of still riding that that remaining wave of the pandemic coming back. But the other aspect there is just simply a markets related factor. They've derated substantially. They're now value names. Essentially, they're trading at over a 20% discount to the market, and we're seeing, as you showed in the other slide, right, this sharp rotation out as interest rates are rising. We have inflation, et cetera. This sharp rotation out of some of these growthy names and into more value names, and they're square beneficiaries of that trend. Of the group, Fiserv is our favorite, but really all three of them are moving in tandem. And, in those, it's kind of exciting because their earnings growth should also be pretty good, not quite as good as the networks, but in the sort of high teens, 20% level. And you've also got this potential for a re-rating in valuation because they've sold off so much.
So finally, then, what do you do with FinTech, with the likes of Block, Affirm, with the pressure that you've just described?
There you really have to pick. One, you might want to just sit it out a little bit here and see where we bottom when it comes to all of the rate-related activity. But you really want to just pick the longer-term winners and ideally pick stocks that you're comfortable holding on a multi-year time horizon. We love Block for that reason. They've got the big Afterpay acquisition coming in this year. That will be a catalyst for them. Their seller business, the POS business, is growing very nicely, high 20s, and is expanding outside the U.S. And so we just would say, kind of pick your spots in there and ideally have maybe a multi-year time horizon because they grow into their valuations very quickly. With a company like Block, they're growing EBITDA at 30, 40%. So if you're okay holding it for a couple of years, you know what I mean? They grow right into the valuation.
Yeah, she's saying don't jump into this and think you're going to make your money in a week. But you do like the story long term. Lisa, always great to have you on. Thank you so much.